Good day and welcome to the D-Marq-AnalyticS channel. We would like to begin by apologizing for having been gone for a while, but we assure you that we are back stronger, and after rigorous research, we will be bringing you a set of 12 videos covering 60 stocks that have outperformed the S&P 500 in the past decade that are either in our current portfolio or our watch list. Buckle up for this one. For this week, we will be looking at batch 8 of 12 of 5 stocks. This is just a suggestion for you all to consider and research, and certainly not financial advice. Let's get started. The first stock in our video today is a data center REIT stock that is our third largest holding by value. The stock is Equinix Inc., ticker EQIX. Equinix is the largest third-party data center provider in the world. Equinix operates 260 data centers across 71 markets worldwide. The company generates 44% of its total revenue from the Americas, 35% from Europe, the Middle East and Africa, and 21% from the Asia-Pacific region. Equinix serves over 10,000 customers, including 2,100 network providers, across 5 key verticals: cloud and IT services, content providers, network and mobile services, financial services, and enterprise solutions. Approximately 70% of Equinix's revenue comes from leasing space to tenants and providing related services, while more than 15% is derived from interconnection services. It has a dividend safety score of 86, a fast dividend growth rate of 10.1%, a strong credit rating of BBB+. It has a levered free cash flow of $2.25 billion, a current ratio of 1.54 with no short-term debt. Second stock in our video today is MasTec Inc., ticker MTZ, in the construction and engineering industry. MasTec is a prominent infrastructure construction company that primarily operates in North America across a range of industries. The company's main activities include engineering, building, installing, maintaining, and upgrading infrastructure related to communications, oil and gas, utilities, renewable energy, and more. MasTec reports its results under 5 segments: communications, clean energy and infrastructure, oil and gas, power delivery, and others. It has a levered cash flow of $455.15 million, $13.05 billion in revenue, and an Altman Z Score of 3.07 with no short-term debt. MasTec's backlog for Q2 2025 increased by 23% compared to the previous year, reaching $16.5 billion. This growth is highlighted by a strong book-to-bill ratio of 1.2, indicating healthy demand and promising future expansion. The company's significant growth potential, coupled with strong industry demand, makes it an attractive investment opportunity, as it benefits from high and sustained long-term demand across various sectors. Additionally, MasTec is well positioned for short-term revenue growth due to its solid backlog, ongoing growth drivers, and favorable regulatory conditions in its segments. The third stock in our video today is Cintas Corporation, ticker CTAS, in the diversified support services industry. Cintas has its origins dating back to 1929, when the Farmer family began cleaning and reselling used rags to manufacturing plants in Ohio. Over the years, the company has expanded its operations both organically and through acquisitions. Today, Cintas serves as a comprehensive outsourcing partner for businesses. For a small weekly fee, Cintas designs, manufactures, collects, and cleans employee uniforms, assuming the upfront capital costs. Additionally, Cintas can replace soiled or depleted items such as mats, mops, trash liners, towels, first aid supplies, fire extinguishers, and cleaning products. Businesses appreciate having an outsourcing partner like Cintas because it simplifies operations and allows them to delegate non-core tasks, particularly those with high regulatory standards, to professionals. Wide Moat Cintas has a dividend safety score of 97, a strong credit rating of A-, and a very fast dividend growth rate of 15.4%, with a dividend growth streak of 43 years. It has a levered free cash flow of $1.56 billion, a current ratio of 2.09, and an impressive Altman Z Score of 13.20 with no short-term debt. It has a return on invested capital of 27.75%. Cintas continues to deliver strong revenue and earnings beats, with impressive organic growth and expanding gross margins, justifying its premium valuation. The fourth stock in our video today is Fastenal Company, ticker FAST, in the trading companies and distributors industry. Fastenal started as an industrial retailer, initially offering a limited range of products such as nuts and bolts. Over time, it expanded its portfolio to include cutting tools, safety equipment, and janitorial supplies. The company evolved into a distributor by establishing a dense network of branches strategically located near its business customers. When a customer grows large enough, Fastenal provides vending machines and deploys its own personnel to their site. Currently, the number of these on-site locations surpasses the total number of Fastenal branches and has become the company's primary focus for growth. Fastenal serves as a comprehensive outsourcing partner for its industrial customers, delivering value-added services alongside a wide variety of maintenance, repair, and operations supplies. Wide moat. Fastenal has a levered free cash flow of $657.05 million, a current ratio of 4.22, and $7.77 billion in revenue, with a very strong Altman Z Score of 25.71 and no short-term debt. It has a dividend safety score of 81, a very fast dividend growth rate of 11.8%, and 33 years of uninterrupted dividend payouts. The fifth and final stock in our video today is AbbVie Inc., ticker ABBV in the healthcare sector. AbbVie's unique value proposition shines through its impressive portfolio of blockbuster drugs, such as Humira, Skyrizi, and Rinvoq, which have secured significant market positions in the immunology sector. The company stands out by strategically focusing on expanding its neuroscience and oncology pipelines through acquisitions and collaborations, all aimed at achieving sustained growth. AbbVie's unwavering commitment to innovation and its holistic approach to tackling complex diseases bolster its competitive edge in the biopharmaceutical industry. Wide moat. AbbVie has a levered free cash flow of $20.04 billion and $58.33 billion in revenue. It has a return on invested capital of 28.35% and a gross profit margin of 71.25%. AbbVie has a dividend safety score of 80, a strong credit rating of A-, and a magnificent 101 years of uninterrupted dividend payouts. Today we have looked at 5 solid stocks that we once held in our portfolio that we thought would be good to analyze and present to our valuable subscribers. Kindly check the description for terms and tickers used in this video. At the end of the 12 batch winning stocks videos, we plan to release a special video for you all where we will share our winning strategy that helped us outperform the S&P 500 since we've created our portfolio last year, with a total IRR on the portfolio of more than 50%. We would like to thank you all for staying till the end, and we wish you all have a successful investment journey. For more content, kindly like and subscribe.